think South Africa has played a big role in driving our recovery in the first half. You've got to remember, South Africa has come off a 2-year period of fairly extensive drought, but we were fortunate we had good rain in the previous summer growing period. So we've seen a strong sort of recovery. We expect South Africa to be up by between 30 and 35% for the year this year, for the season. So that is a big driver and a large part of that 17% increase in production. However, we shouldn't underplay a lot of the work we've been doing around the group outside of South Africa in things like improving our irrigation, improving cane variety, improving factory capacity. So it's been a combination of both. And I think a lot of hard work gone in to actually drive our production number.
When you look at South Africa now, actually quite a small part of the business when you're looking at operating profit, largest contributor to revenue, but only 12% of operating profit. Is that strategic there? Are you looking to even have less of a reliance on South Africa? What are your thoughts on, for example, also the operating environment right now, very unstable when you look at labour relations, for example?
Listen, we do enjoy good labour relations in South Africa. I like to think we communicate with the workforce as effectively as we can. And we would hope that the sugar industry can be sort of treated in that light, if you would like. But we see South Africa very important for our group. It's it's the anchor to the group, if you would like. But you know, the margins that we earn outside of South Africa are fundamentally different because they're driven by different factors. You know, we grow more cane outside of South Africa. The conditions, the pure physical conditions, are so much better for cane production. So we find the productivity and the efficiency levels are a lot higher, and that drives your margin. Therefore, the profit contributions are naturally higher outside of South Africa. But in South Africa, we're still the biggest producer in South Africa. It's an important part of our business, and we'll continue to give it a lot of focus. For example, we're investing over 300 million right now in a new warehouse and distribution centre in South Africa, really to overhaul the cost base, to help us work on that margin and to try and get that contribution up a little bit.
What about third-party growers right now? How are relations with them?
Yeah, very good. I must say we enjoy a very close relationship with our growers. We only produce probably somewhere between 5 and 10% of our own cane requirements in South Africa. So we do rely a lot on private farmers, whether they're small-scale farmers, emerging black farmers, or large commercial farmers. And we have a number of initiatives to get closer to those farmers, to help them where possible. And we partner, for example, with both provincial and national government to channel financial support into the grower sector, mainly in the small grower and previous land claim areas of the business. And those are responding well. Probably 25% of our cane supply comes from that area now.
You talk about, overall across the group, cane production sitting at record levels. In fact, for the first half, up by 14%. Which of the territories right now have you been surprised by when it comes to production? And are you specifically focused on in terms of the opportunity to even grow it further?
Yeah. Listen, I wouldn't say we're surprised. We recognize very good natural conditions in places like Zambia, Malawi, Tanzania, Swaziland, Mozambique. And all of those areas have had very targeted interventions to grow our cane supply. So we've developed new area, we brought in new irrigation, and really worked hard on increasing our own cane supply. And it's very pleasing to see the results coming through now.
How costly is that to bring in, that irrigation system and to basically improve cane quality and crop yields?
Yeah, that is a big investment. On a per hectare basis, you're putting down a lot of money to plant a crop that's going to last you on average an 8-year cycle. That crop will stay in the ground for 8 years. So you need to spend a lot of money in getting the quality up to start with. So we tend to invest in more modern techniques, new irrigation systems, etc. We tend to use computer land leveling systems, etc. So yeah, the investment is substantial right up front.
Mm-hmm. Downstream and cogeneration, still a very small part of the overall business when you're looking at contribution to earnings, 6% there. Talk to us about biofuels and what opportunities you see. Are you laying down the foundation to tap into this market here in South Africa and more broadly in Africa?
Yeah, listen, we see sugarcane plant basically being a very consistent supplier of high-value commodities, whether it's sugar, ethanol, or power. So we tend to integrate that wherever we go. From an ethanol point of view, I think one thing Africa is waking up to is the positive impact that biofuel can have on the national fuel pools in the various countries around the continent. And fuel is generally imported, so import substitution becomes an important factor. and countries can save foreign exchange by producing biofuel in their own country. So we are very aware of the opportunity for ethanol production, and we have active projects in process and under evaluation in a number of areas to actually get into ethanol production, which I think will become more and more important in the years ahead.